You are just in time for the Real Estate Profits with Purpose. Keep it here and learn how to buy and sell real estate the right way. Here are your hosts, Ian Boshoff and Jessica Couch.
Welcome to Real Estate Profits with Purpose. I'm your host, Ian Boshoff. I don't have Jessica Couch with me here today, but she will be back next week, and always a pleasure to have on our show. Today's show is about current mortgage interest rates and which loan products are right for you. So just to give everyone a forefront of what we do is our mortgage and real estate company provides a streamlined white glove service approach with each client ranging from first-time home buyers, homeowners, and new real estate investors emerging into the housing market. And when you work with us, we donate 10% of our profits to the Sweet Dreams Foundation. So thank you for those who listen to our show and continue to do so. And be sure to give us a call or text to 916-872-7177 or log on to promortgagerealty.com if you'd like to be a part of our cause or have questions. So today we have some amazing information that's coming out. We have, our show's going to be about the current mortgage interest rates, which have definitely gone down, which has been a great thing to see. And I got a list of about 15 to 16 loan products that not a lot of people know about. And these loan products will range from conventional, FHA, USDA, jumbo, ADU grants, teacher loans, VA loans, DSCR, which is a big hot topic, jumbo, split loans, bank statement loans, and many more. There's no ratio loans, self-employment loans. I can just keep going on. But I won't bore you with all those details quite yet. I wanted to get into some news, and you don't want to miss these details about the loans because they can really help you and guide you on what type of loan to kind of take advantage of when you're trying to emerge back into this housing market that seems to be a perfect time to buy. So some news that we pulled up, an article with MBS Highway. I just kind of want to go over the economic piece right here. Stocks are higher and mortgage bonds are slightly lower to the day of the start of the day. We heard from the Atlanta Fed President, Raphael Boss, yesterday, who said that he believes the downward trajectory of inflation will likely continue. He also thinks that our economy activity will slow in the coming months. While he's not a voting member this year, he will be a voting member next year. That could bode well for rate cuts, personal consumption in expenditures like the PCE, the Fed's favorite measure of inflation. It's very important. Personal consumption and PCE showed that inflation was flat in October, which was 1/10 lower than the estimates year over year. The index decreased from 3.4 to 3%, which was the line of the forecast like we saw in the CPI inflation report last couple shows. Lower oil, lower gasoline prices have all helped us kind of dig out of inflation a little bit or catch up to it. So that's kind of a key thing to understand. We are trying to get out of inflation. We are trying to decrease the cost of goods, and it's slowly chipping away. So the Fed, by lowering the interest rates, it's kind of helping people afford a little bit more. So that's kind of been nice. The initial jobs claims, which measures the individuals filing for unemployment benefits for the first time, rose 7,000 to 218,000 benefits. Continuing claims on those continue to receive benefits after the initial came rose a whopping 86,000 to almost 2 million for the first time, above 1.9 in over 2 years. This figure points to weakening labor markets where it's much harder to find a job once you're laid off, and people are remaining unemployed for longer periods of time as employers are hiring less. And this kind of touches base on a few topics that we talked about, is that these employers, a lot of the false jobs reports that were coming out were not new hires. They were claiming that all these new jobs, there were new jobs being fulfilled. They were existing employees jumping into additional roles of what they already had. So these employers were trying to become more efficient because of their cost of goods was higher. Their cost of, their labor was higher. Everything was higher. So their costs were increasing. Therefore, they needed to make their employees more efficient if they wanted to keep a job. So everyone's numbers were down in revenue. Not everyone, but the majority. So this is how they offset that. So that's a very important detail to cover because that's a kind of a false claim. So all these unemployment numbers are very important to listen to, which means lower interest rates. Once we have high employment numbers, that means our economy is not strong. That means that we need to jump into lowering interest rates, decreasing the price, which is happening, and increasing employment opportunity. So this is great, great, great news. Pending home sales. So hits the lowest level in more than 2 decades. That's right. I said 2 decades, 20 years. Pending home sales hit the lowest point. And I know a lot of people in our industry, in preferably, or not preferably, but specifically in real estate, have been just dying on the vine. They have not been that busy. But this is a key thing to understand. What most influential business owners and prominent financial net worth individuals do, they do the opposite of what everyone else is doing in that market. They see an advantage, they take advantage of it. This advantage right now is if we have a low set of pending sales, the lowest that we've seen in 20 years, this is the time to buy. And you're going to get a better deal on the property. You're going to get a better price point on the property. You're going to get more incentives and seller credits towards to cover all closing costs and to buy down that interest rate, which what's going to happen is rates are going to drop and then you can refinance. So this is some great information that you really need to listen to. This is not just a guy on the mic that runs a mortgage and real estate brokerage telling you so I get business. This is a fact, folks. So I've been doing mortgage and real estate for 25 years. I've seen downturns. This is when some serious investors clean up. I know a lot of people that own a huge portfolio property. They are buying more and more real estate right now. So definitely, if you have questions or if you're interested in getting involved with possibly purchasing real estate, give me a call at 916-872-7177, or you can log on to promortgagerealty.com for more information. I just want to continue to state on this article, this is also according to Yahoo, the finance section, pending home sales fell by 1.5% month over month in October, according to the data released by the National Association of Realtors. The pending home sales index fell 71.4%, the lowest reading since the index was created in 2001. The Northeast was the only region to show monthly gains. And the NAR chief economics Lawrence Yun says in a statement that the limited housing inventory is significantly preventing housing demand from fully being satisfied. So I can't say this enough. If you don't know if you qualify for something, or if you're thinking home prices are going to fall more, there's going to be a crash, this is the beginning of the end of the housing crash, so to speak. This is our housing crash. What we're in right now is our housing crash. And we've experienced still appreciation, but the pending home sales are low, but the appreciation is still there. Right? And so the best thing to do is really educate yourself. Listen to the people that are buying or own a ton of real estate, not your neighbor who maybe own one property. I'm not putting that down whatsoever, but someone who owns a large portfolio will tell you the same thing. And today's show is about kind of current interest rates, loan products, and, well, I've seen the rates have gone down by nearly 1% this last month, okay? And it doesn't seem to be crazy, but everyone was saying date the 8, right? Date the 8. I don't want to date an 8% interest rate. Date the 8 was short-lived. After all the Fed readings came out, and where we're stating that we're probably in a recession, if not we'll be in one within the next few months, that is a fact, in my opinion. And that is my opinion, but we are in a recession. Once we caught up with inflation, which we're doing now, and we are going to have to lower interest rates to fuel this economy. So rates are lower. They're about a 1% since lower than last month. I was able to lock in an interest rate on an FHA loan with no points being charged other than the upfront mortgage insurance premium that's required by HUD. If you need more questions about that, you can text us on the show. But what happens is I got 6.375. That is not 8%, folks. On my conventional loan, 6.875. Okay? These are the rates that are happening right now. There may be some processing fees or underwriting fees associated to this, but this is what you can get in the market. If you're getting anything higher than that, you need to look at your options, go on the internet, or give me a call, text me, 916-872-7177 for free, no obligation kind of review on what we can offer. And then also, do you want to know more? Do you want a mortgage or rent payments paid for the entire year? Text 916-872-7177 yes, and your name will enter into the Christmas Mortgage Miracle, which pays for your mortgage or rent for an entire year. Coming up, we got more product and grant education. We'll be back after this.
Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 01745667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Welcome back, Real Estate Profits with Purpose. Wanted to jump right into the segment that rates have dropped 1% since last month. We're getting rates in the 6th percentile range. There's no more date the 8, guys. So be sure, if you have questions during or after the show, to text 916-872-7177. Rate drops expected in 2024. What are we talking about? Well, according to the Fed and the data that was released, they're going to drop rates 4 times in 2024. Okay? By December of 2024, rates are expected to drop 4 times. And because we need to get out of a recession, they're anticipating we're going to be in a recession or on the cuff of it. So how do we get out of a recession? Lower interest rates, increase spending, make cost of goods cheaper for other people so we can get the economy pumping again. So that is one thing to think about. What do you think happens when rates start dropping? Do you think more people or less people are going to be jumping into the housing market? Well, if your answer, okay, if you answered you think more people are going to be jumping into the housing market, then you are correct, okay? This is a fact. When there's more people in a housing market looking to buy a house, looking to refinance a house, you're going to have more competition, okay? And that is a key thing. When you have more competition, prices start ticking up a little bit. You start getting less credits for seller credit. You start getting kind of asking price or above asking price on homes. This is the time. This is the deal, folks. I just want to stress this, immensely. This is a very important detail. If you're sitting on the sidelines, you're waiting for a crash, you're going to be sitting for a long time. That crash has already occurred. So opportunity to get a deal right now, and this is why. I just put it simply. I've seen a few cycles in my career, starting in 98, and this is the time. I've spoken to a ton of strategic, very well-educated economic specialists in this field from the mortgage-backed securities market that are traders in New York, and they all agree with this consensus, okay? What I want to dig into is how are you going to take advantage of this market? Like, where do you start? What types of loans are there? The big misconception is you need to have a 2-year history on the same job, which is not true. You need to have a 2-year history of work, and it typically needs to be somewhat consecutive. If you've got some part-time work moving into a full-time job, you need to demonstrate that you have the ability to be in a job for 2 years, or be at any job, or just be employed at that matter. So it's very important that don't pre-qualify yourself. Talk to a specialist. I don't care if it's myself. I don't care if it's anyone on the internet, but make sure you vet who is handling the loan, that they're knowledgeable, that they understand all the loan products. We're going to go over about 15 to 16 different loan products today. So I hope this helps everyone that's just kind of emerging into it. Let's get into this. So financing and what we have available for those looking to get into the market for a new home or investment property. We'll start with the standard cookie cutter conventional loan. The cookie cutter conventional loan, the down payment requirement is as little as 3%. Okay. You can do decent credit. You typically need something in the mid sixes to high sixes to start in your FICO score. 680 is going to be an okay interest rate. Conventional loans are really determined by down payment, but the bigger thing that they are really determined by is credit score. So their interest rates fluctuate more than any other type of loan there is. And it's based upon if it's an investment property or primary, okay? It's also based upon your credit score. Very important to know if you want going into a conventional loan that you don't necessarily need that 20% down. You can get one with 5% down, 3% down, 10% down. You are going to get hit with mortgage insurance if you put less than 20% down. But the very important thing is credit score. Know where your credit's at. Go on free sites like creditkarma.com, Experian.com. You can have a free account. Understand where your score is. Don't close credit cards out. Keep those open. Pay them down. Don't pay off charge-off collections. Those aren't going anywhere, and that's not going to help your credit score. Don't get personal loans right before you decide to jump in to get a mortgage. Don't go buy a car right before you're looking to buy a house. This is a common thread. It can really impact the ability to borrow. If you go out and buy a $50,000 vehicle, you just drop your qualifying price tag about $150,000 on the house. So do not go buy a vehicle, and be cautious of what you're paying off. Be conscious of what you're paying down, and understand those rules in any loan product that you're going to do. Now, going forward with a conventional loan, that's a cookie cutter loan. They do offer down payment assistance with these. We do have a product. We are approved with CalHFA, HUD endorsed. So you're going to have options where there's a 3% down payment assistance for these conventional loans. There's also 1% down. Depending on your income needs to be 80% below the AMI, which is your average median income threshold. So it's kind of tricky when it gets down to that. I don't want to expand on that to confuse you, but you do have all the way down to zero down on these. Zero down, 1% down, 3% down, 5% down. Conventional, you can go 20% down. It's going to give you your optimum scenario. Okay, let's get into FHA. FHA is the next common loan. It's mainly geared for first-time home buyers. You cannot have owned a home for 4 years or lived in one that you've owned for 4 years, but you do qualify for an FHA loan after owning a property, and moving out after 4 years, you're considered a first-time home buyer. So that goes along lines with down payment assistance. You need to have that first-time home buyer definition is not owned in 4 years. So the FHA loan is a solid loan now. It used to be not as solid. All loans with FHA come with mortgage insurance premium. You have your upfront mortgage insurance premium. That is courtesy of HUD. They charge that to insure the mortgage to the lenders. No, not you, but to the lenders. And there is a monthly. That monthly will vary depending on your down payment. And if you put less than 10% down, you will have mortgage insurance for the life of the loan. The purpose of an FHA loan is for people that are more down payment challenged, especially more credit challenged, okay? You need to have a job and income if you want an FHA loan or a conventional loan. There are other opportunities that you have if you're self-employed for other types of loans, and we're going to get into that on our next segment. But just to be clear, you need to have income, and preferably full-time income, okay? If you have a heavy bonus or heavy commission, then you need to have that heavy bonus or commission for at least 1 year in order for us to be able to utilize that. So it's very important to understand FHA could be a better play than conventional because their interest rates are lower than conventional. And when I say that, it's because they come with an automatic upfront MIP charge. They're able to offer more attractive interest rates. FHA rates right now, 6.375, right? That's solid. And so what we're doing on these, on the conventional and the FHA, is we're negotiating temporary buy downs. We're also doing this on jumbo loans, but temporary buy downs, our in-house agents will negotiate the seller to credit towards closing costs, which will include a temporary buy down. What's the difference between a temporary buy down and a long-term buy down? Well, a temporary buy down is what you want on a market like we're having where rates are about to go down. A long-term buy down is when we feel rates are about to go up. And so you want to get the lowest rate possible for a longer extended period of time. But on a temporary buy down, your rates are 2% lower than the start rate. So let's say you're getting a 6.5% interest rate on an FHA loan. We're able to negotiate with the seller because right now you can get a deal in the market, but we're able to negotiate 6.5%. Then we get the seller to pay for that temporary buy down. We're going down to 4.5% for the first year. So the Fed and Fannie Mae is anticipating that there's going to be 4 rate reductions by December of 24. I think optimum is going to be in a year and a half. So not only do you get a 4.5% interest rate the second year, you get a 5.5% interest rate, or 4.5% the first year. You get 5.5% for the second. So it's called a 2-1 buy down. 2% lower the first year, 1% lower the second year. And then after that, it goes back into the 6.5%. The idea, and that's every month, every year thereafter as well. So it's still a 30-year fixed loan. But the idea here is we get the seller to pay for that. That's extra kudo for you. You're making a lower monthly payment back to kind of where we were, 2 years ago. And you're able to afford a house and expand your kind of ability with your pocketbook to make sure you can afford these high interest rates, So this is an amazing product. We do, I'd say 95% of our offers request a credit for a temporary buy down. I'd advise you to go out and try to do that. The next product that I want to talk about is our down payment assistance programs. These down payment assistance programs are for first-time home buyers. Now, down payment assistance is not free money. On our grant programs, they are, but there's catch. There's always a catch with something good. So this down payment assistance program gives you 3.5% as a silent second, 1% interest bearing. So when you go to refinance and get out of this FHA loan on the down payment assistance, it can also go with conventional. But when you go to refinance, you'll be able to, you have to pay off that second mortgage. So we got more coming back after the break. I want to make sure that if you have any questions during or after the show, to text to 916-872-7177. You will be back after this. Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit promortgagerealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Welcome back to Real Estate Profits with Purpose. I'm your host, Ian Boshoff. We've been getting into the discussion how rates have jumped down 1% from last month. Getting into the details of conventional and FHA loans, I've got about 15, 14, 13 more left to go over. We're talking about what types of loans to take advantage of, why you still need to jump into the market while you still can, and what type of loans to use when you do jump in that market. So we've been discussing conventional FHA, conventional down to down payment assistance options, and FHA, more credit challenged options down to 580 FICO score. So you can do any type of loan out there with zero down. That is an option. Your payments and your options are going to be a little bit more strict, but you definitely can do that. We have down payment assistance options down to a 580 FICO score. Now, I was just finishing up a segment talking about what happens to that down payment assistance. Well, CalHFA, what they do is they do a silent second at 1% interest bearing. It's called the My Home product. And so you don't pay on that second, but when you do refinance or sell, that second needs to be paid off. So that second is 1% interest bearing. Depending on the loan amount, will determine on what that is. But the idea of one of these products is just to get you into the home, build the equity up. Hopefully, you're making a little bit more money than you were last year, and then at that point, you can refinance and get into a more favorable interest rate. Now, the trick is you got to have enough equity to pay off that second, which is interest bearing. We do have a grant program that we offer. That grant program has a catch. You got to be in that loan for 4 years to get rid of it. So otherwise, you have to pay that thing back as well. when you do handle the grant program with that is the down payment assistance piece, that grant program is the first mortgage is going to be a little bit higher than your standard FHA rates that are out there for the grant. So be sure you look at the fine print. If you like a second look at something that you're being offered, text to 916-872-7177. I'll be happy to take a look to see if you're getting a good deal. Now, we went over the grant. There's also ADU grants. They just released, coming up here shortly in mid-December, there should be some allocation for up to $40,000 on ADU grants. Now, this is only for people that fall under the median household income arena, right? So 80% of the AMI, the area median income area, that is what you have to fit on to possibly qualify for that. You got to take some courses, but reach out to me if you have questions. Go on to promortgagerealty.com, and ask about the grant programs, the ADU grants, or any other products that we're offering here on the show. We have teacher programs. Again, we have down payment assistance for those, and there's VA and USDA. Both VA USDA can be 0% down. Now, these both require a clear pest inspection, and this is kind of a requirement that VA and USDA have is because they insure the loan. These are great loans, guys. I mean, USDA has to be within a certain area map. If you go on to usda.ca.gov, now you'll be able to pull up a heat map, plug in an address, and find out if that property qualifies for USDA. Typically, they are out of the metro areas. They are on more rural location. So it's important that if you have questions about that, you talk to a specialist. I am a mortgage and real estate broker, and we have plenty of people that can help you out with answering those questions. VA, you have to have active duty service, and what we under your belt or time in war. What we can do is we can pull a certificate of eligibility with a copy of your DD-214, which is your discharge paperwork. We can see if you qualify for zero down. These rates are phenomenal, right? Some were even in the high fives, depending on the day of locking, and that's this past week. So definitely take a look into that. If you are a veteran, we definitely appreciate your service, and you're a valued member of our society. We want to make sure that you get the best treatment and the best deal. And so we've gone over conventional, FHA, grants, down payment assistance, teacher programs, VA, USDA. Let's talk about cash out refinances. A lot of people are going, what? You're crazy. I've got 3.25% right now. There's no way I'm going to touch this. Well, what are you going to do if you want to get into more real estate? People, real estate is the best asset, long-term investment that you can invest in with the best tax incentives that you can have. You know, some people may argue with me, but real estate, anyone who is well off financially, who is retired, they'll have multiple properties. How are you going to get into a property? You got to say you're going to be owner occupied into the next property. If not, you're bringing a heavy down payment, your interest rate's through the roof. So how do you offset that? Well, a heavy down payment's going to help you. If you have been a person that bought 5, 6, 7 years ago, how do you tap into that equity right now? And there's two options, right? There's a home equity line of credit, which is an adjustable, right? You pay interest on what you owe, or there is a home equity loan. And a home equity loan is a fixed high interest rate. They're going to be anywhere between 9 and 12%. And the home equity loans are usually 30-year loans. The HELOCs are a variable interest rate that is, probably around 10%, just shooting off the hip here. But you're going to pay interest only on what you owe. The problem with the HELOCs, what I don't like about them, are that they're interest only for the first 10 years. After that, they're fully amortized over the remaining 20. So your payment is a fluctuating payment regardless of, so every time rates go up, your payment is going to go up. And every time rates go down, your payment is going to go down. But it's based off of whatever you owe. So it's important to understand that. If you don't have a method to pay these off and you do not have strict saving abilities, a cash out refinance is going to be your best play. Now, cash out refinance, you're going to be able to pull cash out right now in this market. Let's say you want to buy in 6 months. You pull cash out, pay down your debt, get your credit score to the optimum level so you get the best interest rate possible, right? And then what I'm doing here is I'm pulling equity out of my house. You may go up to 6.5%, 7%, right? But now you have one payment. You don't have a second mortgage on your home. You don't have a fluctuating payment on your home. You don't have something that's going to impact your affordability later on or shooting with interest rates. So what you want to do is you have that one payment. Now you can take that big lump sum of cash, pay down your debt, and have the rest of the money to use as a down payment on a property, like a multi-unit, a 4-unit. And this is what a lot of people are doing right now. And, they're kind of blinded by the interest rates. They're so interest rate driven. But what is your long-term play as an investor? So cash out, refinance, pay down some credit cards, get your credit score up, have money for a down payment. When you're ready to buy that house and find that house, your credit score is through the roof so you can get the lowest rate possible. Then when rates come down in 2 years, you're going to be able to refinance on the home that you just pulled cash out on, and you're going to be able to refinance on that investment property that you just purchased. And you're going to have a good FICO score because you paid off all your debt. That is the cash out refinance. Now, cash out refinance can be reset at 27 years, 26 years, 25 years, 24 years, 15 years, 30 years. You don't need to restart your process. So the longer you're in a loan, the more you're covering on principal. So if you've been in the home for 8 years, you can do a 22-year mortgage and cover the same amount of principal as you were before. Or you can extend it out. So that's up to you. But we can go over those numbers as well. We've got this next product is DSCR. I hope I'm not going too fast for everyone. But if you do have questions during or after the show, text to 916-872-7177. DSCR, this is the big hot top product that everyone's been wanting to know about. DSCR stands for Debt Service Coverage Loan. And let's talk about it. The DSCR is meant for investment property only. You have to be in an owner-occupied property. You have to own your own home. But you can purchase an investment property without any income. You don't need to show it. All you need to do is demonstrate that you have decent credit and that you own a primary and that you're looking to buy an investment property. They're going to take the rent, the expected rent from an appraisal for that property, and they're going to make sure that this property can cash flow or break even. And depending on what that future rent's going to be is going to determine on what type of down payment you're going to need. DSCR is a very hot product. It alleviates a lot of paperwork that most investors have to experience when they own a ton of property. So if you're looking into DSCR, you definitely, and you don't like paperwork, this is a hot product. Coming back off the break, we got more on jumbo, split loans, 80-20 or 80-15s, bank statement loans. There's so much more to list. You don't want to miss it. We'll be back after this.
Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Thanks for tuning in to the Real Estate Profits with Purpose. We've been talking about loan products and what type of products to take advantage of in this market, this short little sweet spot of a window that we have in getting a deal on real estate. Before I start, do you want a mortgage or rent payment paid for the entire year? You need to text to 916-872-7177 with yes and your name, and we'll help you enter in to the Christmas Mortgage Miracle that we're sponsoring with Pro Mortgage and Realty, which pays for your entire mortgage or rent for the entire year. You heard it here. So be sure, text to 916-872-7177, yes, with your name, and we'll enter you into the Christmas Mortgage Miracle. Or you can log on to 1380 The Answer and fill out the questionnaire and log in directly there. We've been talking about, folks, the CalHAFA down payment assistance, the grant programs, the ADU grant programs, the conventional, the FHA loans, the cash out refinances, the VA, the USDA loans. We are now on to DSCR. This is, again, one of the hottest products out there. We were just talking earlier in the previous segment. DSCR is primarily for experienced investors or someone that owns an existing primary that's looking to buy an investment property, and it's driven with no documents, or not no documents, but very little compared to what a normal individual would deal with when they have a large portfolio of real estate. So definitely look into DSCR. Rates are always going to be higher with these types of products because less documentation, the higher the interest rates. That's kind of a rule of thumb. Unless you're doing a streamlined refinance for a VA or a FHA loan where there's no income or no appraisal, those will come into play probably at the beginning of January or end of December of 2024 or January 2025. We'll see a lot of those, but that's not what this is about now. So DSCR, debt service coverage loan, very good loan for if you're looking to buy an investment property without having to display a ton of income. Jumbo loans, anything above 766, I think it's 766,550 or something to that nature in Placer County, Sacramento County. It's over $1 million in a lot of high-cost areas, 1.1. So what you want to do with Jumbo has a lot of little rules. To get the best optimum pricing, you need to have at least 20% down. And 20% down on a Jumbo loan, in our neighborhood is, let's say, $1 million home. You're looking at $200,000, right? And so $200,000 is not what everyone has sitting under their mattress right now. So the Jumbo loan typically requires you to have 6 months reserves. There are a few programs that we have that don't require reserves unless your loan amount's above $2 million. So we don't require reserves on Jumbo, okay? But most of them have them. And there are also programs where they don't allow gifts for down payment. Whereas if you go with conventional or FHA, those allow gifts for down payment, gifts from a family member or a related member of the family. Those can be initiated on a conventional and FHA loan for down payment, but not for Jumbo. Very important to understand. So Jumbo, the rates are actually pretty dang decent, low sevens. In some cases, soon we'll see them in the high sixes, probably next month. But Jumbo loans are a very aggressive product with someone that's a little bit more heavy into assets and has the ability to put those down. The next option, and I'm going through the scenario right now, is a split loan where you've heard in the past 80-10, 80-15, 70-35, 70, or not 70-35, that's 70-25. We can go up to 95% on these loans. And I definitely want to open people's eyes. So you can go into a conventional loan and 766 and then get a $500,000 second. That's a HELOC, right? And you can do a HELOC or a HE loan and have the ability to come in with 5% down on jumbo or 10% down on jumbo. So those are important things to understand. If you don't know what I'm talking about, or if you like more information, log on to promortgagerealty.com. Looks like we have a caller. I'd like to stop this for a second and answer our phone call. Jason, you're on the air. How you doing, Jason?
Good. What's going on, Ian?
Oh, doing pretty good. If those that don't know, Jason's part of the Shepherd Group with Pro Realty, and I understand you got a couple listings. We've been talking about DSCR loans, USDA, VA, conventional jumbo loans, Jason. So you kind of got us at a good time. But why are we talking about loans? So people could buy real estate. And I understand you got a few listings that you'd like to share, or just one. But tell us about it if you don't mind.
Yeah, we have a few going on, but I'd like to discuss our newest one over on Mansfield in Roseville, if that's okay.
Yeah, hurry up. Love to hear it.
Awesome. It's over on Mansfield, over in West Roseville, where they're building a little quickly at the moment. And it's a 4-bedroom, 3-bath, over 2,300 square feet. Great thing about it has solar, hasn't seen an electric bill in over $50 for a year.
Awesome.
It's priced nearly $100,000 less than nearby new homes, while being a nearly new home since it's built in 2020.
Awesome. Great. Perfect. How much is that listed at?
That's currently listed at $734,000.
Okay.
And what's great about having a house that's nearly new but not new, as I'm sure you're aware of supplemental taxes, it's kind of a second hit you take after you buy a home. With new homes, that supplemental bill can be quite high. But with a home that's been pre-owned, even if it's only been for 3 years, that supplemental bill comes way down. Got it.
That's awesome. Yeah, that's a very important key element to have. The supplemental tax on newer construction, you're paying a lot of Mellorews and you're paying a lot in supplemental. So great to know about that. Can you tell us? I only have just a couple minutes here, Jason, but can you tell us about your other listings that you have?
Yes, we have one, I believe, over in Rockland. That's in a very nice community. I believe we're listed at 1.5 on that. You have a little bit more detail about that, I believe.
Yeah. Well, no, the 734. I didn't mean to bounce back, but what was the bedroom and bathroom count on that?
It's a 4-bedroom, 3-bath, a little over 2,300 square feet.
Okay, 2,300 square feet. This is a great property. And how do they get a hold of you, Jason, if they want to see that property? That's a great price, too, $734.
Yes, especially for the schools that you get in that area. You know what I mean? No HOA, great schools, and, of course, any new home price that you see in the area, add 5 to 10% on it because they haven't done, any of the upgrades. And you get no backyard. Here, day one, it's ready for entertaining the second you put your couch down. And awesome. To get a hold of me, that's Jason at 650-291-1106. Again, Jason at 650-291-1106.
Awesome. Well, thanks, Jason. Thanks for giving us a call on that. I'll talk about that other listing at the end of the show, but thanks for your time and good luck to you. I know that a property will go pretty quick.
Awesome. Thank you, Ian. Have a good time.
All right. Take care. All right. Well, sometimes we have those stop-in listing presentations. That's a quick one. Someone on Pro Realty's team, the Shepherd Group, they've been a great asset to our company, and they just have a ton of properties to sell. They know what they're doing. So be sure to touch base with them if you have a question. So we talked about the DSCR. We talked about the jumbo, the split loan. Now this is a conventional first with a home equity line of credit second. The reason why you're doing this is in case you're getting a gift for a down payment, you want a jumbo home but don't fit the guidelines and requirements of what jumbo has. This is how we're going to do it. Also, a large portion of the loan is on a lower interest rate. Jumbo rates are higher than conventional. So if you have the ability to pay down the second, you can really, really lower your future payment on this property. So that's a great product to have. Now, the no ratio loan is for those people out there. can't really prove income, self-employed or non-self-employed. But as long as you have a strong asset like 20 to 30% down and you don't mind a higher interest rate and you want to get into a property, this is the way to go. We have a no-ratio loan. We can do this cash out. So if you've got assets sitting there that you can't pull cash out because you have no income, DSCR or no ratio loan is going to work for you. And be sure to log on to ProMortgageRealty.com for that. We have renovation loans. Renovation loans are probably the most underplayed loan out there. They are difficult to deal with, but a lot of bank-owned properties that are listed on the market as a foreclosure tend to need these. They need a lot of renovation. They want only cash buyers because they're not financeable. Well, the renovation loan solves that issue. We're able to build in a future expense cost, what a licensed contractor would take to complete that property to make it pass all health and safety regulation. We can finance that into the loan. So you can buy a property at rock bottom price. I think we did this for another client of ours with Jessica Couch probably last year. And that property, literally, he's got $400,000 in equity on a property he put 10% down on. No, 5% down on. And this property, it needed quite a bit of work. It needed about $35,000, $40,000 worth of lipstick. He came in there, got the loan for that, was able to get it to pass the health and safety. He worked on the property himself afterwards and did all the updating and finishes and made this thing just worth way more than what he bought it for. So that is a good avenue to go to. We also have bridge loans. If you don't have enough money to buy another property and you want us to put a lien on your departing residence to use that as a down payment on the new residence, we have those. We have construction loans from ground up, buying the land and doing the cost of construction built into the one loan. We have fix and flip. If you're a flipper, you've got a lot of portfolio, you've got some experience, you've got 25% down or even 20% down, we can incorporate the cost of improvements and we can do a fix and flip loan. Reverse mortgage is probably going to be coming on the next segment. Definitely want to keep on listening because, I mean, we've got so many types of loans out there to take advantage of the market where it's at today. We're seeing 1% rate drops. We're seeing home prices that pending sales have been the lowest in over 20 years. So this is the perfect time to buy. And I definitely want to stress that having an opportunity to know all these products is what I have. And that's what I'm trying to let everyone know. You have this ability to get any of these types of loans. You know, we have these rehab loans, we have fix and flip loans, we've got bridge loans, construction loans, private money. Now, private money is stuff that can sell in 7 days. You can go in contract. We can get you the money in as little as 7 days. And if you have a 30% down on a property, you don't have time, but you know that fast sale will get you a good price or get you a property you want in a last-minute Hail Mary situation. If you're in escrow, we have 30% down private money. These rates are interest only. They're short-term. They're usually 1 to 2 years tops. You're going to pay a little bit of points on those, but these are solid loans if you need to get in a property very quickly. I want to continue to ask everyone out there to ask questions, text questions to 916-872-7177. I invite all of our listeners to tie into Pro Mortgage and Realty on our YouTube channel and listen in. We've just touched base on all the loan products that you can do for a real estate transaction, the best ones out there. Thank you for listening to our show. If you have any questions, log on to ProMortgageRealty.com or text to 916-872-7177.